Yo. Hey, after a week off for Christmas break, it's your homies back. Got a little bit of a sore throat here. It's Bags, GP, Jfdi. It's the Community Rip Live. We're here on Stocktwits. We do this every Wednesday, 1 p.m., and we're so happy that you're here with us. Happy New Year's Eve. We've got an awesome show lined up. We're going to go down some of our best ideas for 2026. We might even get into some New Year's resolutions. But I couldn't help but poke the bear, no pun intended. But GP's over here already ready to play wet blanket on what's supposed to be a festive day. What the hell's going on, GP?
First of all, Happy New Year.
Thank you.
It is been an interesting year for sure. Hopefully you guys had a lot of growth. I know with growth comes volatility, and with volatility comes change. And hopefully 2025 was more good than bad. And if it wasn't, let's do it in 2026. I'm just annoyed with zero movement, right? Like we've been pull up the Microsoft chart. It's apathy. Like, what is that?
Ugly.
It's literally been in a 3-point range for what, 9 trading days now? It's in the upper wick. It looks good, but nothing moves. And is it just a calendar flip that's going to do it? Potentially. But there's names that look good. It's just there's a ton of apathy in this market. And if you bring up the NQs,
Sure.
we have been consistently that yellow line. If you go down to the hourly, you can probably see about 150 rejections in the last 2 months at 25,700. That's that gap up from the China news. It has been miserable. That's over 2 months of going nowhere and then having random dips and stuff. So the argument that people are making is that you can see that right now on the right side. It looks like a head and shoulders, and they had the sell candle to give you the right shoulder, all that other stuff. Sorry, guys. Sorry.
It's live. It's live. Okay, we'll do it live.
Yeah. My bad, guys. My phone is connected to my PC. Anyway, and I had it on silent, but the computer does not give a hoot. Anyway, 25,700 has been the level that you can pretty much short against. It might go over by a little bit, but give it about an hour, or at least the 9:30 open, and it will be red. That is it. We have gone nowhere in 2+ months. And like, I don't care about the Santa rally. That's for other people. But the apathy in the markets probably is what's reflected in my face right now, which is apathy. I still have on positions, but I'm gonna keep my head on a swivel, because if this is distribution as people are talking about, which I don't think it is, then this accelerates to the downside on the calendar flip. And I want to raise cash to make sure that I've got clarity and my mental capital free for the future.
Nick, are you feeling this?
I mean, looking at the cues on the daily, there's apathy is probably the best word for it. Not a lot of volume. talked a little bit about it yesterday, but we're pushing into week 17 of this kind of consolidation period that we're in. And if you zoom out to the weekly, um, and you connect the lows from the June 30th low, kind of the gap up candle, and then just kind of extend it all the way up to the like connect the low of that wide range November 17th bar. Yeah, so no, you had it right. Yeah, right there. So that's kind of the trend line that I'm watching. And it looks more or less to me kind of like an ascending triangle where you have higher lows, but pretty close to the same highs. And we couldn't break higher, which leads me to think that there's the potential to head lower and retest like the low of that last what was it December 15th low, so like 600. Um, on the chart that I have so my first touch within the range is kind of when we broke out. What is that? Late September, and then we have the high in early November, or maybe the second. And the third is November 17th. Fourth is kind of what was that? Basically the first week of December, and so like the fifth kind of wave within this range would be kind of I mean, if we held the trend line, it would look incredibly on the weekly. I think it would look really pretty. What that means for kind of like individual stocks, obviously to be determined, but I wouldn't be surprised, in either way. Even if we did roll lower, I still believe that like in the way the pattern's building out, it resolves to the upside. So I definitely think it's a viable dip. The 30 and the 40-week moving average are both the 30-week is actually surpassing the lows of where we kind of broke into all-time highs back in on September 8th, or that September 8th candle, which is nice to see. And then the 200-day or the 200-day slash 40-week is starting to catch up to there as well. So I'm kind of looking again that trend line in alignment with like kind of the zone between that 30 and 40 week is really what I'm looking to see hold. And if we do roll lower, that's kind of the zone that's the zone I'm looking at. At the same time, price is kind of moving sideways, and it's just kind of like if they don't have the volume to push it higher, maybe they'll take it lower. Um, I just think it's going to act as a little bit more of a catapult than like a like I don't see the distribution. I don't think it's
Yeah,
distribution,
I
but
don't either, Nick. So the comment that Ben made before we started the show was, it's not an administration thing; it's a up and to the right thing, right? And for a market that is up and to the right, the natural disposition seems to be selling, right? Through
sure.
through the last few months, any point in time when there's no volume, like where's the volume? No volume grind higher. Why is the no volume grind lower? My question to you is like, if we're generally in a in in and it's I still think it's option stuff in terms of um, premium tools. We're probably going to pin ES to 6,900 for the year. I wouldn't be surprised if the NQs would have a massive drop at the end to pin at 25,000, which is about a 500-point drop at the end of the day in the next 3 hours. And then RTY, look at RTY, which is small caps, right?
Yeah.
So this 4 freaking years, we are still back testing the breakout 4 years later. And this is all happening while now pull up the XPI. While the XPI has doubled in the last 6 months.
Mm.
Right. So like I still think it's all options related, and that we've been talking about this for a couple of years now. The more this market matures, the more the derivatives market drives pricing versus organic. Because I don't know about you guys, but when I talk to my anecdotal friend circles, most don't want to buy this market. Most are like, there's a recession. Most are um, they're not going to put money to work. So, um, what bring the question I'll ask both of you is what brings those people back into the markets?
I mean, realistically, probably nothing other
Yeah,
than like euphoria. But I think with how fast the AI autonomous stuff, space shit, like I think how fast that's coming up on us, I think that the real fear out there is the job market. Like that's why I think you're probably sensing or feeling that those don't have or don't want to put money to work is because people are afraid their jobs are going to get taken over by the robots.
I think that's
Which
fair, Nick.
I think that the apathy, kind of to the point of apathy, at least in the market, especially over the last 6 months, I think is the market trying to figure out where they really want to put, like where they want to really put money into. Like most, I think most traders, investors, especially growth guys, would argue that the mag names are the market leaders, right?
I would
Like
argue that.
right. So
market
what
drivers. I don't know. I would say they're market drivers, just because if they're weak, no matter what happens, if those names are weak, the Nvidia's, the Microsoft, the Apple, um, we can't we can't move higher. No matter how much breadth expands, as you've seen over the last 3 months, the breadth expansion has been pretty solid. A lot of names that are non-traditional
Yeah.
names have done well, yet the market has done nothing.
yeah.
So
I mean, that's what um, when we had we were talking about breadth earlier in the year. I mean, I think that goes right along with that. What you're saying, GP, right? I think both things can be true, Nick, in what you're saying. I think there is some concern about what's happening in the macro environment. But as I mentioned yesterday on the show, I think that until we start seeing cracks in earnings power, it just sets up a grind higher, right? It's climbing that wall of worry, which is my base case for 2026. Um, I just really believe that what usually happens when the market tops or bottoms, right? Is it due to apathy or is it because extreme exuberance or extreme fear?
if you're
Probably
asking
extreme
me, apathy is
exuberance.
never the reason, right?
Yeah, apathy is not really the reason. It can be a short-term fluctuation in price, but it usually doesn't mark a top and it usually doesn't mark a bottom, right?
Yeah.
No, both are always marked by capitulation, whether it's in sentiment, volume, or the combination of both, right?
Exuberance or extreme fear would lead those two different scenarios. And I cannot say that there is it. I think there's more fear than there is exuberance, especially if we're talking about anecdotal evidence. I know where I live. Obviously, there's a lot of people that didn't have as merry Christmas as they did maybe the year before, right? And whether that's for personal reasons or job related reasons or what have you, it just seemed like this year was more of a muted celebration of what we do at the end of the year.
Yeah.
So that's my take. I think we're climbing a wall of worry, and how high that wall of worry is, I don't know. I expect that we will get some type of pullback or give back. Could it be in January? Of course, it could be. I would expect it to be in the first quarter, um, but I don't think this is a sustained continuing lower like we did in 2022. I could be wrong. I was wrong in 2022 for a lot of the year, but I'm fully capable of admitting when I'm wrong, and this is my thesis for now.
Yeah,
if we saw, um, let's say we saw a sell off from SPY here down to like, I don't know, 665, or maybe down to that low end of the range, like 660. Would you still be in the camp that we see like, let's just say that that happened kind of pushing into like into January.
I mean, we're $5 from all-time highs on the SPY, right?
Yeah. Would you still be in the camp that something bigger is coming in like late to or middle of next year, or would that be it?
There was some awesome data that was released by someone. I'll have to find it on Twitter, but every year in a midterm cycle, if you buy uh what is it, June or July, and hold for the next 9 months, you're undefeated on positive gains in that time. Now that just means the indexes, right? That doesn't mean that individual names couldn't get hit or teeter tottered up and down. But in general, I would think as we go through the middle and end of the year, the the stock market as a whole should be higher.
Yeah. I mean, you're talking like from highs here in the SPY, like a 660, like a retest of kind of that trend line or the low end of that range would be an 8% correction off the highs.
Yeah, I
Yeah.
mean, Nick, you know this. Anywhere between a 7 to 15% correction can happen at any time,
Yeah.
and we have seen them happen more often in recent memory than usual. And this comes back to what we talk about a lot: is maybe cycles are happening faster as opposed to longer and more pronounced.
Yeah.
So that gives also the room for quicker recoveries, correct? So if all those things are true, which our recent history provides that it has been in this short time period since 2019, I would expect that to continue. So
Yeah.
yes, if we got a anywhere from 7 to 15% pullback, I think those are buyable dips until they're not, right? And GB, that's the question you always make when someone brings up, "I just buy and buy and buy." Is where you're getting the money from, right? Where are you getting the capital from to keep buying the dip? Well, you have to sell something, obviously, right? You have to have
yeah.
some type of dry powder or way to access funds.
And we touched on that yesterday, right? Um, like your the stage one basis, right? That we were talking about is like you have to use a stage one basis to generate cap gains, right? And capital gains to be able to deploy more at the bottom. Because if you're just holding in that in that range, you're not actually building any wealth. You're just going from up and down, up and down. But if you're trimming at the top, let's say 20%, and then buying that 20% back, you are stacking your gains over and over and over again until the stage one is ready to go, which is why I say stage one bases are soul destroying if you don't realize it that you're in the stage one, right? Um, in terms of where we are in the cycle. I this to me the SPX is basically done what I thought it was going to do off the 6740 level, right? That level that we talked about back in October. It's going to cause a flush. It's going to cause this massive kind of consolidation flush. We got it. We are trending above it. So if the if the markets are going to do what it did in January off the 100% retrace, this is I'm 100% fib. This is the 123. It's a smaller one. It's consolidated now for 3 months. The next target is the 161, right? And next big target is a 161 fib extension, which is that 7741 level that we talked about 3 years ago, right? And so, um, if you're looking at this, you could potentially identify a wonky inverse head and shoulders. And so, like, I know I'm wet blanket in the morning and earlier part of the show. I still see the path of where we can go higher, but I'm also cautious that if this is distribution, if this is distribution at that fib level, which it's been pretty much pinned to since we tagged it, with ups and downs above it and below it, is that on that last fib in January, we retraced back to 50% on the fib. That was a move from what 6,100 all the way down to 4,800 in
Yep.
a matter of 2 months. So that's all that's all I'm saying in terms of keeping caution. But you don't have to necessarily, in my opinion, like this is not as big a fib number for it to cause that kind of destruction is my thesis and my thought process. And so if it's not that, we have to go to the next one eventually, which is the 138 is 71.21, right? And I'll post the chart on Stocktwits later today or tomorrow. But the 150 is also there as well if you want to add that, right? Which is the 50% move higher, which is if you have a 50% on the downside, you want to tag the 50% on the upside, is generally what happens as well. And that's at 74.31, right? So I see the path for both directions, which is why there's probably frustration because you're like, man, this setup looks great. Like Microsoft looks great to me. Meta looks great to me.
I think the
Netflix,
frustration was yours. Now you're talking yourself out of your own frustration, which is great.
no. I'm still frustrated. Don't get me wrong, right? Like this is still pretty. It's like I, if you've noticed, FinTwit and StockTwits has been really, really quiet in the last 3 months, right? And
It's
I
gotten
think
quieter
they
and quieter.
absolutely destroyed short-term players across the board, not
I
just in
agree.
crypto, but across the board. And so, um, like like even though the index might be down 3% overall, they've absolutely hammered stuff because nothing has moved.
I mean,
And
I love to point at it.
what's that?
Hymns, right?
Yeah,
Like, here's a darling, basically down 50% in
for
that
no reason,
time.
right? For no reason, and it's just general trickle down. There's just nothing. If you're looking,
Obviously,
what's that?
MSTR, right? Like another 50%er.
Coinbase, right? They're all the same patterns. Like if you're looking at this is the same pattern: beat down, bounce, and then slow trickle back down to the beat down area. And now we got to see what happens here, right? Are the bulls going to step in and through, or are the bears going to declare victory? And this is Coin, this is MicroStrategy, this is Hims, this is
Microsoft,
Microsoft, this is Meta,
Netflix,
huh? Yeah,
Netflix.
Netflix, Spot. Meta is under the 200. I love the way Meta looks, but it's under the 200 day. It is going to be prone for failure. The failures happen under the 200 day. I love how it's setting up, so I don't think it's going to fail. But black and white, it can fail, right? And Microsoft barely hanging above the 200 day. Apple, which
I mean,
is
maybe that's
essentially
what we need then to get this market moving is a flush.
A flush. Flush that
the flush is
turd.
not going to help. Everyone's been destroyed. There's no one with cash. Right? Like if the retail army is what drove the bottom tick in April, that retail army is no longer around. Right? They've been crushed for the most part.
Yeah.
And like the things like markets are forward looking, right? Nick, and you talk about the AI stuff, right? So then why isn't the AI piece still blasting off, right? Like if the concern is that AI is going to take jobs away, that means AI is real and it has real world impacts. Why aren't names like, I'll take a Tesla for example, but you can go across the board. Tesla is on the verge of solving FSD, right? And unsupervised robo taxis and all that other stuff, and it can't find a backbone at prior all-time highs. So the question, and Tesla's his own beast, but there's a lot of names in this space that if their real world AI stuff was a real threat, then you would assume that the contrarian would be to still continue to bid those up while the market continues to be weak.
All right. This
I
is
think
the.
it's.
Go ahead, Nick.
I just say I think that it's still an unknown, and it's like a variable that it's both unknown and I think really I was gonna say misunderstood, but like we don't I'm just speaking for myself, but like we don't know. Like there's
Yeah.
just I don't know. I don't know. I guess the more again like the more I look at the indices, both the SPY and the Qs, I'm just like we don't have the volume to take us higher. So maybe they're going to take us lower, but we're still within a range. So like until the lows of the range get taken out, there's no reason for me to necessarily shift gears. But to your point, it is worth having dry powder to put money to work when we do test the lows of that range. And in the same breath, as you talking about like like gold or some of these other whatever other names we've talked about, it's like okay, if you're looking at the SPY, um, you can basically say that we're range bound until the highs get taken out. So until 690, 692 gets taken out and we resume trend, we're trapped in a 690 to 650 range. So you're either selling into the highs, holding, or buying versus the lows of that range. There's not really or shorting maybe I guess against the high end of the range because we're in a chop range. But for like swing traders, especially like shorter term swing traders, there's really no reason to be involved directionally until we either test the lows and we put in kind of a definitive like bottoming pattern versus the lows. You're trying to catch a knife, or the trend is resuming and we take out the highs. Because I like the way I'm
It's a
kind of
show me
again.
market, in essence, is what you're saying, Nick. It's a show me
Yeah,
market. Show me you're
totally.
going to go higher, or show me you're going to go lower, but stop. I'm not doing anything in this range right here because it's just maddening.
Yeah, like if you go to the weekly on the SPY yeah, totally. Like, again, we talked about it a little bit yesterday. It's like when price goes range bound, that's when all of our thumb screws are coming out. Everyone's patience is being tested. Everyone, or for I shouldn't say everyone, like the majority are getting chopped up. They're like, oh, this is the time we're going higher. Oh, we're going lower. This is the time we're going higher. No, we're not. We're in a range. Like in just an ABCD leg or fashion, if you put an A point at the tariff lows, B point the most recent high, 690, and then again, I'm kind of in the camp that the 650 is kind of the lows on the S&P or the SPY. That puts a D point up at like 865, and that could very easily happen in the way that you're talking about, where like it just grinds and melts higher. So if you're looking at it like in an ABCD leg, you're really not getting involved again unless highs get taken out or you really think that C point is going to be that 650. I'm sure like, you could probably, draw some fibs and you could probably argue like, I mean, shit. Honestly, price could honestly retest the shit. I mean, price could really test 610, 620 and still look pretty good. It ultimately could test 585 and still be perfectly healthy in the longer term. So it's just kind of like how much you want to zoom out. How like, do you really think we're going to kind of hold within this range? Obviously to be determined. I think we do, but obviously if the 650 gets taken out, I gotta completely shift gears.
All right.
Anyways,
Enough,
you can switch the.
enough of current events for the moment. It's the New Year's Eve show. We have had a tradition of giving some resolutions. I know everybody has their own different perspective on any particular resolution. I have my resolution for 2026, my 2025 resolution. I knocked it out of the park, so I'm so happy about that. But Nick, GP, and Ryan. My producer Ryan on the show. You guys have any resolutions to share for the upcoming year?
On a personal basis, just honestly, to your point, post show yesterday, I think a continual focus on presence, like being in my. I'm definitely lean to like the anxious side, and so like once I get into my head and start floating into outer space, like holy shit, you don't know where the fuck I'm gonna end up. So presence, working on groundedness and being in my body for sure is definitely going to be a hardcore focus of 2026.
Very good. Ryan, hello.
Hello.
Happy
How's it
New Year.
going?
Great to see you.
You as well.
What's your resolution for 2026 if you have one?
Probably just hang out with my kids more and lose weight. It's gonna be
Presence
goal
is a
for me,
present.
yeah. Mm-hmm.
I love it, Ryan. GP, what about you?
On a personal level, uh, just get back into a routine of working out. Since I broke my collarbone back in October, just haven't, and
Yeah.
with the holidays and stuff, and just gotten in the way. Just get back into a routine of, obviously, I got it right here, so there's no excuse. But
Get to
yeah,
squatting, bitch.
just getting back to being strong, and I've started. I just haven't kept the consistency. Uh, and from a market perspective, less is more in 2026. Um, the the things that we talked about yesterday is these stage two breakouts, and we talked about names are are going to be powerful. They're going to have drawdowns here and there, but they should be powerful coming into 2026. I'm super excited about the economy in 2026, and I may be one in that conversation. I think if there's fears of AI, the flip side to that is the joys of living life, right?
Yeah.
You get to live life in a more meaningful way. Last month I've driven about 1,300 miles. 12 of that has been um, on the full self driving, and me and my wife are in the car and we're talking about stuff. It's just like the possibilities that this opens up, right? Like, if everyone was driving in the same capacity in the same system, there's less anger in New Jersey. Everyone's so angry all the time because you're getting cut off and you're sitting in traffic, and so like that's one thing. But just overall, the fears of AI can also lead to the joys of life. So
Sure.
try to embrace the part of this journey in AI, um, in the way that it will impact you the most positively.
Nick, you kind of teed up a little bit of what we were saying post show yesterday, and I think it plays into a little bit of what all three of you are saying. Which my resolution last year was to do less and make more, but really the onus of that, right, was me being more present and more aware and more grounded in things that are real than to be concentrated on the market and trading and charts, et cetera, et cetera. And that really helped me, um, you know, spend more times with my kids, Ryan. I mean, being more present, right? Not worrying about open positions or looking at 100 charts a week or whatever I was doing at the time. And I really think that helped ground me in a way that I didn't expect necessarily. It's sort of been an evolution for me personally to get to this point of my life. And I think 2025, while it was a very difficult year on many fronts, it was also very fulfilling. So I hope all you guys are able to find that. But my one for 2026 this year is I want to master the uncomfortable a little bit
Oh,
and protect my headspace more. And part of that is going to be I've dealt with, my shoulder, my elbow injury, all the other things. I'm going to get back to running. I can't wait to start my running regimen back in 2026. I'm going to use that time to completely tune out, right, and protect my own headspace. I want to master things, whether it's conversations or just things that I've had trouble with in the past that have made me uncomfortable for one reason or another, right? And be okay with those not always uh, feeling good, right? Whatever those troubles or whatever those challenges are. So a little bit of master the uncomfortable and really get back.
Goggin style.
Yeah, yeah. So that's my 2026. Thank you guys
I
so
like
much
it.
for sharing, Ryan.
Can I make one more?
Yeah, of course.
So I have a resolution for us here, right, on this podcast. We've seen a lot of growth over the last 3 years. We got a chance to actually meet in person after hosting this. I hope next year that we continue to build on that growth. If you and we can see there's a path in this podcast. We can maybe get paid for what we do here, um, along the lines of just trying to give back to the community. We hope that we continue to rock out with our whatever out, and just have right like
Rock
that's the
out with our
goal.
Ryan out.
Yeah, but dude, 2025, like I want to acknowledge the fact that 2025 has been phenomenal for us, right? As a team here.
Yeah.
And Ryan, you're part of that team, so kudos to you as well and all the guys before you that were also helping out with this stuff. It's been a pleasure to see. And if you are watching this and you like it, please share, subscribe, uh, get us to the growth and the reach that we've been wanting to do. So that's it.
Yeah, I love that, GP and Ryan. Absolutely, you are an invaluable part of our team, and we love having you on. Not just to pop on, and say hi, but to interact. And we love the chat too. Obviously, you're always in there, so can't thank you enough for all you do for us.
Of course, yeah. Somebody has to be the beauty with all these brains around, you know.
Well, I thought that was
I thought
my
you were gonna
job.
call us beast there for a second, because that's more appropriate.
All right, you guys want to get on to best ideas of 2026? Ryan, you got a best investment idea for 2026 before you go?
No, not really. I don't really have any ideas. Just
Just-
anything
just-
but.
Just stick with the winners, right?
I'll throw a grenade.
TQs.
Anything but Tesla.
Anything
Tesla.
but Tesla. Oh.
I like
I
it.
just want to see what GP would do.
You're not saying
That's
short
it.
Tesla. You're just not saying Tesla along.
Yeah, I just want to see what GP would do, honestly.
I'll tell you what. It's not Tesla's year next year, right? It can still go up. Don't get me wrong, but next year is not Tesla's year, in my opinion. We've talked
I'm gonna
about
have
this.
to call Cookie.
No, but we talked about this. If you're looking for percentage gains, Rivian's going to outperform Tesla by a landslide, right? Like it's that's a $20 billion market cap versus a 1.5 trillion, and they're if they continue to execute, it will be one of the biggest winners of 2026, in my opinion. Rivian. So
Yeah,
like I agree with
yeah.
you. Tesla's mature. It's not going to do what it's done before. I think a lot of people think it will. It doesn't mean it can't still go up 50, 60, 70%. But it's like I know you weren't on, Ryan, yesterday, but we talked about where the concentration should be. And it's all these stage 2 base breakouts that have been working all of 2025. So those are the ones I want to be long into 2026. Like we saw what metals did, right? Off the stage 1 base breakout, and it basically took out all-time highs and went apeshit. Gold doubled in the last year and a half. Silver has gone absolutely nuts. Copper is next. You've seen what Rocket Labs has done. You've seen what HIMS did for a little bit. And then you saw SoFi, Palantir. Like these stage 2 base breakouts continue to stack on top of each other. So if you're and Rivian's in that stage 1, Rivian, Unity, all those names that we've talked about continuously over the last couple of months are on the verge of stage 2 breakouts. They need to have fundamentals for that stage 2 breakout to happen. Otherwise, it's going to fail. But if they execute, if they do all these other things that go along with it, these are where you should be, in my opinion. And this is not financial advice. This is where I am. I'm in those names more heavily than I am Tesla or Microsoft or Meta. And what we talked about yesterday was use the FANG names to generate short-term capital. Then you can put towards better bases and better breakouts, because the FANG names will do what they do. They do their 20, 30, 40, 50%, whatever it is, and then they'll come back and correct and do nothing for months on end. So yeah, I agree with you, Ryan.
So he doesn't hate Tesla. He just thinks there's going to be better performers than Tesla. So there you go, Ryan.
Honestly, like for real, I'm actually very interested to see Nvidia and AMD what they're going to do with this giant chip shortage that's going on right now. That's like causing all their prices on their hardware to go up. That's one thing I'm following pretty closely, and will be very interesting to see how things move forward. I mean, prices are doubling from already very expensive pieces of hardware. So,
yep.
Yeah.
Thanks, Ryan.
Of course.
Nick, let's get into your best of 2026. You want to pull up the charts for you?
Yeah, sure. I know again it's not necessarily a competition, but I'm trying to to beat you guys. So I went with some kind of cheaper names. ONDS being number 1.
Day to day.
Yeah, it's already in stage 2. Obviously it resumes its uptrend above 11.
Nick, why ONDS? Is just technical, or is there something about it that you like fundamentally?
Technical, and I like drones. I think all things aerial, autonomous, AI, all that shit. I think we're gonna see if we have a big year in 2026. I think that's where money's gonna flush into. And then kind of Randy pointed out, even with like defense names, like on an expensive, on the more expensive side, like I mean, if you just look at like like Lockheed Martin LMT, I think like LMT looks like great. So like if I was gonna go with the more expensive names, I probably would have had LMT, Boeing. But anyways, sorry, back to the ones I picked. ONDS, DigitalOcean, so DOCN, purely just technical. I like the stage 1 base.
It looks like that Roku move.
Yeah, I could argue that it hasn't even gone stage 2 yet.
Yep.
Stage 2 begins above 52. So obviously if it stays trapped within the range, I'm kind of shit out of luck on that one. I went with RKT, kind of another one. Like it's almost got a base on base, and I wouldn't even say it's I'd probably argue that it's also kind of still stage 1. Above 2250, I think this thing gets cranking. I think Rocket just points to more probably interest rates, I would imagine. And then my last one was RR. I was kind of debating on actually of RR versus Rivian, because I think I agree with GP. I think Rivian is almost like just looking at the chart from a technical perspective, I think there's not a better looking chart out there right now than Rivian. But RR, it's kind of sitting on the 200-day or the 40-week. I kind of like the descending trend line, just connecting the highs kind of as it's falling into the 40-week there. Volume's a little sloppy, but I think if it can break that trend line, so kind of back above like $4, I think this thing has a chance to rip. It's if you go back to the January 22nd of 2024 candle, I guess I can't see it on my trading view, but that candle is, well, at least it was the high volume candle. Maybe I'm mistaken. I must have been looking at something else. But the fact that we're within the lows of that candle, I think we have the chance of testing the high of that, and then from there, I guess to be determined. But robotics name, so I'm just kind of leaning into cheaper and robotic,
Nice.
autonomous, all that stuff.
Nice. I'm up next. It should be no surprise that I'm going to start with Amazon. I've talked at length over the last, I don't know, couple months on why I believe Amazon is next. I think they are, ready for reacceleration and expansion out of this range. It is the least gainer of 2025 for mega cap tech. I think it's only up 5 or 6% for the year. That said, I think we talk about AWS, we talk about all the other pieces. One of the things that always gets pinned on with Amazon is the retail business, right? And I think this is the year the retail business really booms on the Amazon side. And you guys know I think retail is so hard, but no one has more robots at work than Amazon. And I'm talking about the entire thing combined. No one has more than going on for Amazon.
Are
So
their
I think
warehouses entirely automated right now?
I don't think they're entirely automated, but they have a lot of they're very close to fully automation in a lot
Yeah.
of those. So I think massive margin improvement on the retail side, along with all the other catalysts. Hyperscaler, tech play, ad service, you name it. Amazon is where I'm at and plan to be. The next one goes right along with that. A new position that I recently started, Service Now. This is the year that chatbots, AI goes from chatbots to actual agents in the enterprise. So I think what we're going to see is we're going to see things going from chatting to doing. And how does that benefit ServiceNow? Well, ServiceNow is in all of the enterprise, and they have a 98% renewal rate. And this will have all their AI features baked in it for all the enterprise. So I think ServiceNow here for me is a discount that I'm happily able to take. Another name, we've talked about it previously, Roku. Roku is not just a dumb box for streaming devices. Roku is an ad network, and they have a great relationship with Amazon. Thus, my ad side of my Amazon play. But Roku is going to have ads on everything at scale with all their connected TVs. We have the World Cup happening this year. We have midterm elections happening this year. Two major events that are going to have a ton of advertisement, and Roku should indirectly and directly benefit from that. And last name I don't talk about a lot, or haven't talked about it hardly any at all. GitLab. Why GitLab? I think as we enter into more AI space in the enterprise, we're going to have budgets getting slashed and consolidation. And that's where GitLab really has a good foothold. Now, their main competitor is Microsoft's GitHub, and we know Microsoft has Copilot and OpenAI backing involvement, I should say. So this is going to be a bit of an uphill. But the way I look at it is we basically have a $30 put on it from Google on GitLab. And if you think Gemini and Google are going to be leaders or the leader in the AI space, I would anticipate that GitLab comes along for that ride. So those are my four names. I don't have a position in GitLab yet. I will definitely, or Roku, I will be opening positions in them soon, whether it's long, common, or leaps options. But I will definitely have a position in both of these during 2026 at some point. So that's my anticipation. Obviously, already long Amazon and Service Now.
Awesome.
GP, your turn.
So I know I talked about a bunch of stuff. I think the best performing stock of 2026 will be FSLR.
First
It
solar.
is. It
Yeah.
is. Start with the yearly on this. Um, we talk about stage one bases. This is the ultimate stage one base, right? Like, it's so to me this, and it's not expensive by any means. Our energy needs are only increasing over time, and so I think this, as you can see over the last decade, volume has been trending up, and it's putting right into the the 2008, is it 2007 candle here. So I think this is actually going to be one of my one of my biggest winners, hopefully by the end of 2026. Um, the other ones I talked about, obviously, I think Unity looks phenomenal. It's stage one base broke out, stage one base retested, and this, as long as management executes, of course, right? This should be a stage two breakout. Stage two breakouts are notorious for big moves, shallow pullbacks, and lack of entries, right? So that's what I'm expecting. If I don't see that, if it starts to falter and stuff, I might have to readjust during the year, but that's my thought process here. Rivian, same concept, though it hasn't actually broken out of stage one yet. It's still sitting inside the base. So it's a possibility that Rivian fails right back here down to the 12, 13 area again, right? I'm not saying I think it's going to do better, but it failed before it broke out versus Unity, which was it failed into the breakout. So just something to keep in mind. Um, I also like Twilio. So on the same concept um, of what Bags was talking about, agents and like software has been destroyed by the threat of AI. And now that AI can get to a better level and can be have real world impact, some of these software names are looking pretty good. Top of the list is Twilio for me, but there's a handful of names that also look like what Bags talked about with now and with also Snow. Like I really still don't like the chart, but Snow has been showing relative strength as well. This is a typical base breakout retest as well, right? So it's based for what, almost 2.5 years now. Broke out, came back to retest. You can see that the volume on the retest wasn't as high as the volume on the accumulation. So putting my bias aside for the charts, the reality is it's a base breakout retest and could be another one of those stage two movers in 2026 as well. So, but in terms of picks, I got FSLR, Twilio, Unity, and Rivian if they execute.
GP, I was giving you some shit when we were talking about these before the show started. You're the guy who's been saying it's all real world stuff. You give us a bunch of software names. What's up with that?
So we're talking about best performer. I'm looking at it from a perspective of best performers, right? So we've talked about at length XOM and Rio, but these aren't names that typically do alpha of 100, 200, 300% in a year, right? So those are still in my portfolio, but I think they're going to do 150, 200% next year? No. I think they're going to it's Exxon Mobil is breaking out of a 17-year base, right? Like it's it's
I mean, we said the same thing about gold.
yeah, yeah. So wait till it breaks out, but it's above the 2007 highs or 2008 highs. So it has broken out, it just hasn't followed through, right?
Yep.
So to me, this is a beautiful consolidation pattern at prior all-time highs. So as long as it holds above this, this should be a pretty up and to the right chart in 2026. I just don't think it's going to be 100, 200%. If it is, great. I'm like, I'll be happy. Collect my 4.5% dividend and and see 100% gainer, that's perfect.
Yeah, I
And
don't necessarily think Amazon or ServiceNow is going to go 100% in 2026 either, right? But I think they should outperform the market. For Roku and GitLab, yeah, I can see them do 100%, right? So I think you can kind of barbell it a little bit, but I think all those are fair points.
yeah, I think that's just the way I was thinking about it, is like the best performers of 2026 versus outperformers versus the markets, right? So, and Rio, if you bring up Rio's the same concept. I think this is a 5% dividend. It's a bullish engulfing year on volume. Copper looks great, right? That's a that's a sexy yearly candle, right? In my opinion,
Yeah.
and that is years at the end of today. That'll be 17 years inside the 2007 candle, right? So
It's
it's
crazy.
still inside this massive range, and so I think it pushes towards maybe the high of that range, which is, I don't know, about 75% from here. But I just don't think it's outperformance. I mean, overperformance, not
Overboard.
outperformance.
Yeah, that's a good way to put it. Hey, Nick,
Yeah.
what is it about the names that we put together that you like, don't like? Or do you see a theme that we kind of all went with? Just curious on your thoughts of the collection that we put together.
I like the list all around. I think it's a pretty well balanced list. And from the way that I kind of trade, it's kind of a balance of like not necessarily like sector or space, but a balance of like expensive names versus like, momentum. Like the names that I picked, for instance, like yeah, they could run like 100, 200, 300%, but then they could also get rugged and correct, round trip that pretty easily. Whereas like the more expensive names, like, now, for instance, or like again, like the more expensive names, I would lean more towards like stair stepping and trending. Um, but yeah, I don't know. I like the list. Honestly, I love GP's list probably more than yours and I's. Although I love the look of Roku. I love the look of Rivian and you and Twilio. Like I said, I was considering going with MDB because I like the monthly look to it. Huge base, big range. Um, looking at like MDB, like I could make an argument for a run to 700, but that's not a 100% run. It's a 200-point move and definitely very tradable. But it's not gonna, outperform like a
Nick, one thing that I
small
wanted to
momentum name.
bring up that I noticed about our list, you
Yeah.
had a name on the list which would have basically made this statement defunct, but none of us have any semiconductors on this list. You at one point, Nick, said TSM,
Yeah.
but you took that off last minute. You read anything to know semiconductors in this group? And you guys know I'm very heavy semis, so
Yeah, I as far as the semis are concerned, I just think that TSM has the prettiest current setup. Like it's already trending and it's been going sideways for the last, however many weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's just say basically gone sideways the last 15 to 20 weeks. The 30 and the 40 week are catching up. Where like let's say Clack kind of looks like it's pulling in. I did like LRCX quite a bit too on the smaller time frames, not as much on the weekly. Um, I don't know. And then I as much as I it's just AMD AMD is just I have such a tough time trading AMD.
it's a
It's
shitty
not
trader.
I jokingly call it a dog turd, but
It is.
it's got 1,
Advanced
2,
money
3, 4.
destroyer.
It's gone 5 weeks tight and it's above the low of that gap. It's above the low of the gap low, which I would say that AMD and TSM probably look the best to me.
All right.
A-Lab looks pretty good too.
All
I
right.
don't
So
know.
with all that said, none of us were convicted enough to have semis on our list. Semis in any shape or form, right? Do we think that the sector is going to be a leader, market perform, or languish in 2026?
I think it'll resume trend.
So market perform or better?
Yeah.
Yeah.
Just looking at NVIDIA alone, I think that, the long-term moving averages they haven't flatlined yet. So I would be leaning to the trending side as opposed to like underperforming.
GB?
I think semiconductors are now going to transition to a more utility-based sector. You need semiconductors to build all the real world stuff, so they'll continue to grow. It's going to be really hard to comp the last couple of years of growth. So I think they market perform, right? So
Yeah.
I don't think they outperform. I don't think they underperform. I think they market perform. I don't think they're defensive sectors. When I say utilities, I mean it's a utility for the AI growth engine. So they will continue to grow, but no one's going to be shocked if NVIDIA came out tomorrow and beat earnings by 30%.
A
right?
bajillion percent,
that was
right?
expected. Huh?
Yeah,
AMD,
bajillion
if it
percent. Yeah.
beats, we're expecting that. TSM, if it beats, Broadcom, if it beats. The only one that could potentially beat and people would be surprised is SMCI, which has not participated at all.
So you're saying market performer better?
Yeah.
Yep. I think so too. I don't think the trade's dead. I think we're climbing a wall of worry. Hey, we're at time. I don't want to keep Ryan too much later on New Year's Eve. Guys, last words.
Happy New Year. Let's get after it. All around. Health, wealth.
Amen. GP.
Get drunk. Happy New Year. Happy 2026. Happy crush the entire year in all facets of your life. And if you guys ever need anything, happy to reach out to us. I think it goes for all of us. We'll try to help as much as we can. If you're struggling, if you need just a idea to bounce people off, community is the reason we all grow. So don't be afraid to reach out to that community in 2026. It's never too late to start. Happy New Year, guys.
Yeah, and thanks, Ryan. Thanks, GP. Thanks, Nick. Obviously, it's been a terrific 2026 for us, or 2025 for us. I'm looking really forward to 2026. I'm just going to share what I shared with our buddy T Stonk earlier. We're all the collective of those who shared with us along our respective journeys. So keep sharing, keep being authentic, keep acting, be deliberate about your actions, and just appreciate you guys. And we'll see you next week right here on the Community Rip Live on Stocktwits, 1 p.m. Wednesday. Appreciate you for tuning in, and we'll be back with you in the new year.
See you in 2026.